please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Counting down to pre-open, Sandeep Shenoy is still with us. Sandeep, we've seen quite a bit of rally of late in pharma stocks. So, Wockhardt, Aurobindo Pharma, Ajanta Pharma. Anything that you're buying right now?
Well, Anuj, I think the market is getting segregated on a risk-return perspective between the US-facing companies, the rest of the world-facing companies, and India-facing companies. I think the appetite is more towards Indian-related companies or companies catering to the domestic market first, and then maybe ROW markets. So I guess you could see some kind of a uptrend happening there. The US-facing companies are going to be in kind of a depressed zone at least for another couple of more quarters, because each of the stories, large-cap stories there, have got their own individual overhangs, and that's not going to get lifted at least for next 2 to 3 quarters. So I guess it's going to be a trading zone or trading option for those stocks. But yes, the domestic related companies which are going through some kind of a consolidation minor, I think you are going to get there.
Okay. Well, I really would appreciate if you have been more specific about the kind of companies we should look at. But just a minute, Sandeep, we are getting the pre-opening rates, and okay, it's extremely difficult to decipher. Sensex is up about 0.5%. Okay, now the Nifty is also up about 1/3%. So we will have to wait and see if it is a decisive difference with what the SGX Nifty was preparing us. To be fair, as Anuj pointed out, Hang Seng kind of has turned, and the SGX Nifty definitely reduced its losses. Maybe we want to pull up Hang Seng and SGX Nifty just to keep that on your radar. At the moment, okay, rupee is open stronger. Yesterday, when we went to bed, dollar cost 64.11. Now it is 11 paise cheaper. 64 rupees is what the dollar is opening at. That's the dollar price.
My eyes are firmly stuck on Reliance Communications. 10% higher once again in pre-open. Now, it's a bit of a crazy game happening here. Yesterday also the stock was up 40%. 10% is all that you can do in pre-open, so will be interesting. Mahindra & Mahindra goes ex-bonus today, so that stock could see some profit taking today now that the bonus stripping is over. So that's something to keep an eye on. I think something similar with Balkrishna Industries as well. That's also going ex-bonus, and that's also a stock which has seen quite a bit of buying ahead of X date. Normally on the X date, some of these stocks are quite active. Okay, that rate should settle, should not be 7% higher. And a couple of these stocks which have done well of late. United Spirits up about 1.5%. Arvind is up about 1%. So a couple of these stocks in the mid-cap basket are doing well right now.
Yep, as we near Christmas weekend, United Spirits better do well.
Archie's is up 10% since you spoke about Christmas.
Okay, fair point. Archie's. The other set of stocks that have run up, of course, lately have been the auto stocks as well. The big rally in the Nifty was on the shoulders of the auto stocks. But Sandeep, before I come to the auto stocks, I wanted to ask you about auto ancillaries. Remember Sundaram Fasteners and Daughters? I got a message from you for that. Sundaram Fasteners, to be fair, has actually risen about 20% this month itself. How are you looking at auto ancillaries in the mid-cap space?
I think the well-run ones have the potential to give you market outperforming returns, Lata, because I think they have gone through a very trying or a challenging phase over the last 2 years, but some of them have managed to improve their financial metrics, especially ROC and ROE. I guess that will give them some kind of support in this kind of a uptrend. And the sector is showing some signs of, not some signs, I think has exhibited clear signs of coming out of woods, and in some of the segments, I think the growth is very visible. So I guess the large boys, especially the auto majors, will give you decent returns despite having exhibited strong returns in the last 1 year. But the ancillary guys could be in for a bout of outperformance.
Okay,
actually, Europe is also picked up in terms of growth, and many of them have plants in Europe. And of course, Indian auto numbers are looking better with each passing month.
Okay, Pidilite is the other stock which is looking up. Remember, there's the buyback meet, so 2.5% higher on Pidilite. It's a stock which has done well actually of late. I remember last month you were discussing this. Maybe the stock has bottomed out and seeing fresh round of rally. Manoj Muralidharan of Religare is with us now. Manoj, good morning. Weekly options expiry, of course, today. Do you have any strategy on that?
Good morning, Anuj. Anuj, I guess last week we had a pair strategy wherein we involved Bank Nifty put along with a Nifty call. That was, we spoke a lot about the volatility index also, which might peak towards the standard deviation of 18.2. Now, what we believe is there is traction and there is a ratio which runs between the Bank Nifty and Nifty, and especially it works good on the day of expiry as well. The resistance that if you simply divide Bank Nifty by Nifty, the resistance comes somewhere close to 2.53, and we believe we are somewhere close to a 2.46 to 47. Having said this, what we believe is 28th December, that is your month-end expiry, to 26,000 call option for Bank Nifty can be bought, I guess, somewhere close to a 38 to 40 rupees. Yesterday is closing around 50 rupees. We are expecting that premium to go to a target of 100 rupees. Now, eventually, if you see, we believe even yesterday, if you take the Nifty, 10,400 and 10,500 strike, there is huge amount of put writing which happened in the second half of the series. Ideally, when we started the day, there was good amount of call writing, and the VIX have almost come to the 12.8. So we're not really expecting the VIX to go below 11 and a half. And because the event has unfolded, and now we would be getting into the Jan series with the rollovers coming up, we are expecting this cost of carry to all the stock futures that are prevailing in the month of December to get carried to the Jan, which simply says that Nifty might be in a range of 10,400 to a 10,600. So a better strategy is you buy a 10,600 call option for this 28th December expiry. I guess it's around 8 to 10 rupees. The target can be a good 40 rupees on that as well.
Any specific stocks that you will trade?
Absolutely. Lata, interestingly, because the Nifty has come to this 10,500 mark almost thrice, and every time it comes to this top, we see stock specific variation which happens within the sector. To say that, if you see Muthoot Finance from the finance sector, if you're seeing, that is one stock where we're seeing huge buying which is coming. This time that the Nifty has rallied from the 10,200 mark. So we believe that Muthoot Finance at 443 is a very good buy. The stop loss should be 428, and the distribution or the target might be somewhere close to a 485. We like JSW Energy as well. We would recommend buying both of these in cash market, not really in the stock futures, because it's just 5 days odd. We have the expiry and it might be a positional call. So buy JSW Energy at 83, and the stop loss we recommend is 78, and we seeing a good 12 to 14% move on that. So the target would come somewhere close to 94. The same goes with Chennai Petro as well. We like that stock and we recommend buying it somewhere close to, let's say, 429 on that. The stop loss should be 418, and the target or the levels of distribution where some profit booking might come, it would be closer than 444. So that happens to be the target on the stock as well.
Okay. Thank you very much, Manoj, for joining us with your trading strategies. Maybe we want to pull up the bond. Do we have a yield number at all just yet? Any yield, any trade in the 10-year bond? I guess we have not yet got any trades over there. But yesterday we got the minutes of the Monetary Policy Committee's meeting, the last meeting, and to get to know what the key takeaways were, to me it looked like at least the RBI members of the MPC were sounding more hawkish than perhaps the original MPC statement indicated. Urjit Patel was flagging off inflation risks and a fear that the inflation may be higher than what the trajectory was indicating. He also feared for the fiscal slippages coming through, and crude was another thing that he was pointing out, inflation expectations rising, making it a little uncomfortable. Viral Acharya also warned that the inflation trajectory could remain above the 4.5% range for a goodish part of 2018. What are the key takeaways for the market from these minutes? Amandeep Chopra, Group President and Head of Fixed Income at UTI, joins in, as does A. Prasanna, the Chief Economist, ICICI Securities PD. Good morning to both of you, gentlemen. Prasanna, your key takeaways from the minutes?
Yeah, so I do think that it's broadly consistent with what we saw in the policy statement and the post-policy comments in the press conference. So, I I agree with you. The RBI members are perhaps a bit more hawkish, and I would say even one of the external members also more on the hawkish side. But the larger message coming out of it is they're saying it's wait and watch. They'll wait for more data, and obviously growth data is one of the things they will wait for, as well as the budget, the union budget. So I think to some extent our reaction to this minutes is also colored by the subsequent data. The subsequent CPI print has been higher, and most of us have revised higher our March estimates, which would mean that yes, I mean if you kind of juxtapose that with what they're saying, then definitely, yeah, there is a hawkish tilt to it.
Okay. So, how would you play? At what point will you place a rate hike, if at all, in 2018?
No, so our base case is that there will be no change in rates through 2018, but the risk clearly is of a hike, of a one-off hike. In fact, we think that even with a neutral stance, there can be a hike. Of course, interestingly, Dr. Viralacharya, he equated, basically he said either there is no scope for accommodation as well as there is no need to change stance, which seemed to give the indication that first they will change the stance and then they will hike. But personally, I don't think that's how it will happen. I think within a neutral stance, there could be a hike. But that is a risk factor, like I pointed out. And my sense is that the earliest that can come through is August. I don't expect any move before that.
Okay. Amandeep, good morning. We've seen quite a bit of hardening of yields. Do you think there's more on the upside here?
Well, I guess from the current levels, the yields do look fairly cheap right now because you have a term premium of almost 125 basis points, and that's in an environment where RBI has only reiterated the neutral stance. They've not yet hinted at any rate hikes. Yet the market is clearly factoring in potential rate hikes.
So,
now,
you mean you're comfortable buying 7.2?
I think at 7.25 on the old, the current 10-year, the new 10-year would actually be priced at something like 7.10, which is, from our perspective, more or less in a relatively, I would say, cheap sort of a range for the 10-year yield.
Okay. Actually, we have you on a scratchy line. So very quickly, if you can only tell us what the range could be in the Jan-March quarter for the 10-year.
So I think you will soon see the new 10-year come in next month. So, look at the new 10-year, I would assume it to trade somewhere between 6.90 to 7.25. I think the risk still remains on the upside because, you do have the budget followed by, both the RBI meeting as well as the FOMC first meeting of the, calendar year. So there are three very significant events which can actually move the yields further up if any of those events actually turn out to be somewhat negative. So I guess there is a somewhat risk on the upside.
Okay.
But I guess, markets, like I said, seem to be pricing in a rate hike. That seems a bit unlikely. You've seen the inflation trajectory being some sort of a cup move where it went down and then has started moving up and, clearly did not warrant any aggressive easing or, multiple rate cuts. I think we're seeing a similar sequence as far as the inflation trajectory is concerned. It will move up. Clearly, we see it going upwards of 5%. But it then does, trend down closer to 4.5 if nothing else changes in the next fiscal. So I guess in that backdrop, you can't really expect RBI to hike rates suddenly.
Okay. Well, thank you very much, Prasanna and Amandeep, for being with us. So both of them saying that there is an upward bias to the yields and, of course, to inflation as well. I'm still waiting to see where it is opening. Is it 7.24 that it has opened? I thought it was 7.21 at close yesterday. But we'll flash the bond yield for you. Okay, there it comes, 7.25 now.
Yes.
So clearly there has been a jump after the MPC minutes.
Almost 7.26.
But to be fair, even crude was more expensive overnight. It has gone towards 64.5. So there are multiple reasons why the bond yields have jumped a little bit.
Okay, just about 2 minutes left for markets to close, to open rather.
And it's clearly this is holiday season.
Okay. Mitesh, any top conviction trade looking at the pre-open rates?
I think what I will watch out for is in case the market opens 30 points higher, we will be again back to levels close to about 10,490, 500. And if the bank nifty starts slipping, an intraday trade on the short side could open up immediately over there. But rest stock specific wise, I think NCC to me looks like a stock which should clearly show strength and continue its momentum.
Okay. Sandeep, you said that you are well advised to stay with the big boys. Where are your preferences?
I think, you know, you
all the 50.
No, not all the 50, but you can't stay away from the private sector financials for the current level, because I think the sheer dominance of there in the share of market cap, I think you can't wish it away. You may not like it, but you have to stay where the herd is. But I guess if you want to seek some kind of outperformance, it makes sense for you to, as I mentioned, cement and engineering. There are few options there, but it makes sense for you to latch on to them for getting out of outperformance. Auto could give you a good decent outperformance also, but beyond that, I think all other sectors are going to be market performers. They won't give you outperformance.
Okay, actually a big outperformance has come from auto, as you point out. Maruti is defying gravity for so long now. Thank you very much, Sandeep, for being with us, and have a great 2018 if we don't see you before that. I just wanted one quick question on Pidilite, a view from our technical experts. Sudarshan, how would you look at that stock? A buyback is going to be announced, but it could well be just a market buyback. We have to wait and see.
Oh, it's a buy. It's a buy at current levels for anyone looking for some days of trade.
All right. Yes, the products are definitely a buy, but at this point in time, we are also focusing our camera on A. Raja. I think he's leaving his house to attend the 2G court, where the verdict is going to be read out. Maybe a little before 10:30. It should be the first thing that we will get when the court starts. It will be a packed court, and I think our reporters had lined up over there well before 9:30. Otherwise, you're not going to be allowed, you know, if it's too crowded. So expect to get a blow-by-blow account. You cannot take cameras inside, so the lines will come out first. You will get the lines will come out first. You will get flashes first, and then, of course, the pictures from outside the court only. Okay, that's the race to the market opening. And that's a green opening. It's 0.1% higher across the board. The mid-caps are running away with a 0.4% gain. But the Sensex and the Nifty have exactly reversed yesterday's position. Yesterday, 0.1 down. Today, it's 0.1 up. And the Sensex actually is almost a 0.25% higher. 73 points higher on the Sensex, 33,850. And the Nifty up now 16 points, so 0.15. 10,460. So actually you're still within striking distance of the all-time high. The Nifty Bank is the one that's not helping, and it's flat to just one red tick, but largely flat. Very quickly, what the stocks, I mean, it's the mid-caps that I should be really reading out. M&M is dragging. That's obviously because it's the bonus is now out of the way. Bharti Airtel, Wipro, IndusInd Bank, Axis Bank. So banks are clearly the ones that are weakening, and that could be the bond effect, the crude effect. So IndusInd, Axis, ICICI, SBI, Kotak Mahindra, all of them are down by about 0.5 to 0.25%. And on the gaining side, you have the auto stocks, Hero Moto up almost 2%, GAIL, Hindalco, Sun Pharma, Eicher Motors, HCL Tech, L&T, Z, Maruti, UPL. So a mix of rural and some other engineering capital goods stocks are all up between 0.5 and 1%. I'll just quickly read through what is happening in the mid-cap space before I toss to you. Anuj, mid-cap as an index is up about 0.5%. Relcom continues to gain. It's up 6% now. Lasa Supergenics is up about 5%. Among other stocks, you know, Monet Espat, Videocon, all the NCLT cases are up about a couple of percentage points. Gokuldas Exports, textile stocks 2.5% higher. Unitech is actually opening in the green. And what is not opening too well, okay, Bank of India is down about 2%, McDonald's is down about 1%, MRF, Motherson Sumi, Jubilant Industries. So a little bit of profit taking coming in those stocks.
Yeah,
Anuj?
so clearly, you know, it's again a mid-cap day, you know, Lata, as we thought it would be. Just a couple of pharma stocks keep on your radar. One is Wockhardt. It's out of F&O ban. There's some big buying happening on that stock. And obviously, there's, you know, even today, there's been a bit of a breakaway gap on Wockhardt. So normally stocks which come out of F&O ban see a bit of buying momentum. And the other is Ajanta Pharma, again a mid-cap pharma stock. There's a big upgrade on from Motilal Oswal on that stock. So that stock has also opened about 1% higher. So these are just a couple of stocks that I thought I'll point out.
Reliance Nippon Asset, did you point out?
Yeah, Reliance Nippon Asset, also
CLSA,
of course, initiating coverage on that. Pidilite as well looking good. PVR has looked good. Tiger Zinda, of course, releases tomorrow and likely to be the biggest Hindi grocer, at least. A lot of people think that would be the case. So that's up about 2.5%. But decent opening for the market. The mid-cap is at, again, a new record high. The Bank Nifty on the weekly options expiry day a bit flat. Mitesh, your thoughts on market opening?
Yeah. So as I said, Anuj, if the market opens close to about 10,470 and the Bank Nifty starts to slip, the first trade in the morning could be to possibly take some short positions over there. I would still want to see the Bank Nifty trade below yesterday's low. 25,560 is where I think the trigger is. If that is being broken, then you can take a short in Bank Nifty with a stop of about 80 odd points and look for another 150 points to happen on the downside.
Okay. Sudarshan, any thoughts on the index, or would you want to give us some more trading strategies?
No, both. Close your long positions in both the indices. Wait, if 10,500 is taken out, buy again with a 50-point very tight stop loss. Otherwise, don't stay in the market. Buy on a dip to 350. This 150-point range could be treacherous. There are two buying opportunities as we start the day. One is Godrej Industries, already in some kind of an uptrend and likely to sustain that move. And the other is ONGC.
Okay. Prakash, anything on your radar?
Yeah, looks like Nifty is doing trading sideways so far. I would like to buy Cipla, looks good, can climb to levels closer to around 615, 620 zones. Even Hero Motors looks good, can climb to levels closer to 3850.
Okay, thanks Prakash for your time today. Mitesh, your thoughts on Wockhardt? That's been running up for the last few days.
See, you know, Wockhardt does appear to be getting into some kind of a stronger uptrend, and I think this trend will last for a number of months. I'm looking at a four-figure kind of a target over here. About 1,020 is what I think the stock will do. A good idea would be to, slowly start adding over here and add all the way down to about levels of 770. I think the levels of 750 and below are not to be tested for the time to come by. So, if somebody is entering now, it's slightly late. That's why, this buying in tranches. But I think overall, the trend is firmly on the upside.
Okay, another stock that's coming on the radar now is Vakrangi. Of course, that's also vertical rally.
That's also ex-bonus today.
But still it's higher.
Yeah, still it's higher.
It should be logically lower.
No. It's after initial trade, Lata, the stocks also recover as well. So,
okay.
But
is there anything in that stock itself, Sudarshan? Have you looked at that share? The chart?
Yes, it's surprisingly a buy. Even at these elevated levels, because it's just come out of a trading range, and if you have the courage, go and buy it.
Okay, turning out to be again a stock-specific day. A lot of individual stocks doing well. TV18, standard disclaimer, of course, owner of the channel that you're watching. That also at the high point of the day. Pidilite is at the high point of the day. But for me, the stock of the moment really is Wockhardt after coming out of F&O ban. And I don't know if there's any buzz or something, but that stock has now raced away to a 3.5% gain. All right. We'll thank Sudarshan and Mitesh on that note. Of course, Mitesh will come back to you at around 10 a.m. Let's invite our market master for the day, Mahesh Patil, Co-Chief Investment Officer at Aditya Birla Sun Life AMC, is with us now. Mahesh, good morning.
Good morning.
I first wanted your thoughts on the kind of rally that we are seeing in the mid-cap pharma space. Do you think it's a bit of a valuation play, or is there something more than that?
Well, I think the pharma sector, it's essentially a bottom-up story looking like, right? So whether it's in the large cap space or in the mid cap space, stock specifics where there are no issues about US FDA plant clearances are there, and where there are good healthy product pipeline of new product introductions, we are seeing those stocks doing well. Also, companies which have got a slightly larger domestic focus, within the domestic mid cap pharma or large cap pharma, our outlook is looking much better over there, because I think after a low base of last year, after the price DPCO impact, we should see decent price increases and better earnings growth on the domestic front. So I think it's again been a stock specific story, be it mid cap or large cap, and that would continue, I think.
Okay, pharma clearly. Well, since we have started off with the ones that did not perform so far, let me ask you Infotech as well. Are you now putting incrementally more money into Infotech stocks? First, the big ones.
IT sector, still I think we've not seen any signs of improvement in terms of the growth outlook. We are closely monitoring the sector, and I think it's still looking at around 7-8% kind of top line growth. So unless there is a meaningful improvement in the top line growth. I think we'll wait for another quarter to see, because the budgets for the next calendar year, IT budgets, will have some indication on that. I mean, if US growth is looking better, we should see some increase in discretionary spend. And if that happens, if there is some upward revision in the earnings, in the top line growth over there, then it could be a sector worth looking at. Though I think the rupee also tailwind is not really in favor of the IT stocks. And looking at the kind of growth, again, there is also expectation that the salary increases could be slightly higher, because last 2 years we haven't seen any major salary increases for the IT guys. So given that, some pressure on margins could be there unless you get some benefit of the rupee and some better top line growth. So I think the sector still remains an underweight for us, but a sector needs to be watched closely because of the underperformance, and the valuations also some of the larger players are not really that expensive.
Okay, well, big moves in individual names, Indocount, Manappuram, Jet Airways, all these stocks surging a bit. You know, how big a factor is crude going to be, Mahesh? Because, you know, a lot of people believe that liquidity-driven markets will keep ignoring these sort of headwinds. But that does put our macro under a bit of a stress. So your thoughts on that? Because macro has been a big driving factor for the market for last 1 year.
Sure. I think crude, again, has to be looked in the context of what impact it will have on the fiscal and also on the current account deficit. So a CAD is still currently comfortable at around 1.3, 1.5 in that range. So until I think crude about up to $70 or so, I don't see much of a challenge over there. But yeah, if it starts to really move above that level, then I think India specifically will have challenges. You would see the CAD shooting up, say around about 2 as a percentage of GDP. And that could have some pressure on the rupee, and then we see that kind of snowballing into capital flows also. I mean, you see FII flows would turn negative, and that can have an impact on the market. Again, on the fiscal side also, you will see some kind of pressure over there unless the government is able to pass on the full benefit. Even on the inflation, I think we have seen inflation starting to move up a bit, so it will put further pressure on that. So I think until I think another $5 from here, I don't see much of an impact from the market. But above $70, clearly it will start be a worrying factor, at least from a short-term perspective. Though, however, I think the medium-term outlook on oil still remains pretty benign. I think it won't sustain at those levels, is what our view is. You will see supply coming in from US. I think production will start to increase from US shale gas. So automatically that will put a cap on the increase what one can expect and what is the sustainable level of oil from a medium to long-term perspective.
Mahesh, what are you working with in terms of an earnings growth next year?
So next year we've just sat down with our team when we're looking for the annual outlook, and after looking at each and every sector and stocks in the Nifty top 50 companies, we are looking at a growth of around 19 to 20% for FY19. Again, this number looks higher, I mean, compared to what we have seen in the last 2 or 3 years. But I mean, if you really dissect it sector-wise, I think the strongest sector which is showing a very strong growth is the banking and financials. Again, there the larger growth is coming in from the corporate banks, the banks like ICICI Bank, Axis Bank, SBI, where I mean, the base is very, very favorable. I mean, this year we are seeing a larger impact of provisioning on the, and assuming there are no incremental slippages, which it looks like, I think you should see more than 50, and even 50 to 100% growth in some of these names. Okay. So that's pulling the overall growth much higher. And then there are other sectors like auto, for example, stocks like Tata Motors, okay, which will see a very strong growth because again, the impact of Forex, which pulled it adversely in this fiscal year, would act favorably. And apart from that, sectors like media, cement, metals should show strong growth. So I think it's after a long time, I think we are seeing, I think from this second half itself, I think you should see the growth momentum for earnings starting to improve in a big way.
How much of that is in the price per se autos? Because, you know, look at Maruti's stock. Yesterday it had 10,000. And of course, TVS Motor, Hero Motocorp, Bajaj Auto, all of them are at lifetime highs.
Yeah, so I think broader market itself, if you look at, yeah, to a large extent, it is there in the price. I think the consensus also is somewhere around that number. But I think the valuations will remain fairly stretched, again, as long as we see the global rally continue. And also the domestic liquidity, which we think will continue to sustain. So I think the valuations would remain slightly higher than their longer term average. I think that's a trend. And with growth, earnings growth looking better, there is no reason why the multiple should really correct. So I think what we are buying in from here for the market and most of the stocks will be earnings growth and re-rating. In fact, you could expect some kind of a de-rating as some of the earnings growths come in some of these sectors. But I think valuations can remain at slightly higher levels for some time.
Okay, by the way, just pull out, the way some of these mid-cap pharma stocks are moving. Stride Shasun has now moved to high point of the day. And of course, Ajanta Pharma, Wockhardt, these two stocks remain the flag bearers of that rally, but Strides as well now moving to the high point. So there's clearly some big buying in mid-cap pharma today.
No, not just that. The market itself has actually crawled higher. So, a buy at the opening actually would have been rewarded and a sell at the opening would not have been rewarded. But we are, to be fair, talking only the first 15 minutes of trade. We have to see whether it holds for the first hour. But at the moment, it's an uptrending market. Sensex up about 75. That's where it began. Nifty is up 25. It started about up 15. And the mid-caps have continued and built on the gains that they opened with. It's up about 0.6. The Nifty bank is just about staying in the green terrain at this point in time. And big gainers in the mid-cap space. Like I told you earlier as well, Vakrangi is the one that's running away today in spite of being ex-bonus. Pidilite is up 4%. There, of course, is a expectation of buyback. Reliance Nippon Asset, AMC, is I think the CLSA target is what, 325?
Yes, 325.
So there's that stock has got a positive bump up. And then, of course, the Nifty gainers are Z and Hindalco, Sun Pharma, all those stocks also doing well. So some of the big boys in the pharma also doing well, though there is outlandish rally in the mid-cap pharma stocks. Finally, Mahesh, what are you to say about the mid-cap rally? It's hit, it's a 20% outperformance, you said, compared to the Nifty. And it's been hitting an all-time high every day of this week.
Yeah, I think the mid-caps continue to do. I mean, it's not this year itself. I mean, last 3 years, we have seen the mid-caps outperforming the large caps. I mean, earlier they were coming in from a very low base in terms of valuations, but we've seen that really catch up, and now they're at a significant premium to the large cap space. So I think, again, mid-caps, arguably the growth in some of these stocks, if you look at the mid-cap index and look at the earnings growth for next year, the growth there is much stronger than the Nifty, which we discussed around 19% growth, what we're looking at. So to that extent, it takes care of the higher valuations. But again, in some of these stocks, we've seen that the valuations have gone much higher than even their historical high levels. And there is some risk. I think there are pockets of bubbles which could be there in the mid-cap space. But by and large, I think mid-caps, we have coming in from a kind of a low GDP growth cycle.
Yes.
So the overall economic growth is likely to improve over the next 2-3 years. And in that scenario, normally we see the mid-cap companies tend to do much better in terms of earnings growth. So if the growth sustains in the mid-cap stocks much higher, I think the stocks, mid-caps, would still do better over the next 2 to 3 years. That's having said that, I think there will be always pockets of very high valuations, which one needs to be careful, because at these levels, the margin of safety in the mid-caps is very, very low.
Fair point.
Okay,
Mahesh, thanks a lot for joining us. Well, of course, growth has returned. You had Tata Steel announcing a major expansion. Thank you very much for joining us. Those shots that you saw, obviously, you would have guessed Kadimuri's leaving her home and going to the 2G court. These were the two people, two political persons who spent time in jail, actually, when the investigation was going on. Judicial custody for both Kadimuri and Raja, and of course several officials of other companies, of the several corporate officials as well. Very, very important day, key day for us in our legal history as well. We'll keep getting you updates from that. The court itself is expected to pronounce the verdict only at 10:30, and thereafter we will get you the key lines. But for the moment, let's shift focus back to the stock markets and to corporate India. The Tech Mahindra management earlier this month unveiled a new strategy. They have identified 3 mega trends, 4 key bets and 3 objectives. So it's a 3-4-3 strategy that they unveiled. To tell us more about this strategy as well as the current business environment, we are joined by Vineet Nair, Vice Chairman, Tech Mahindra. Good morning, Mr. Nair. Always a pleasure having you with us. Well, if you can tell us a little more about the 3-4-3 strategy that you unveiled, and what does it mean to business immediately, say, in FY19?
Well, I mean, these strategies relate to the changing environment in technology, in the sense that the old ways are giving into new. Take, for example, automation. Automation is increasing at an incredible pace. In fact, if you heard about it, we created a platform called Ecomos, where we have reduced the work by about 80% through automation, and that automation is basically being used. Ecomos is basically being used in the telecom sector, and the results are amazing. And we have done this in collaboration and for possibly the largest telco in the US. So similarly on digitization, I mean, you name it, and everywhere the technology is undergoing a major shift. And I do believe that Indian IT companies can only survive if they are in the forefront of it. And I do believe we have been able to show a pathway. And I'm sure other Indian IT companies are doing the same, of how we can be in the forefront of all these changes. So it's interesting talking of that the US companies and the European companies are coming to us for setting up systems for them. So the earlier period of death and gloom has gone away, because the belief that we could only work with the older systems is not there at all, because we are now seeing not only being able to adapt, but also to innovate and to lead. Okay. And I think I see a good future for technology, because the demand for technology is going to touch every aspect of human existence.
Yes, you have.
So it is not as if it's only coding coolies here. So with that, the demand is going to grow. There's going to be no segment of life which is going to remain untouched. It is going to be different. It's not going to be as labor intensive, but it is going to be huge. So net, one is very optimistic about the future of technology and the role of our company and other Indian companies in it.
Sure.
A critical role in it.
Okay.
But with it is, it's not going to be that labor intensive.
Okay.
So,
yeah, Mr. Nair.
Those are the Yeah.
Mr. Nair,
tell me.
Good morning. No, that point is taken, sir. I just have one, query which is more related to how the stock market views the businesses, at least in the near term. Your margins have been improving for last 2 quarters. Is there more headroom as you get into? I mean, but among the top 5, yours still is on the lower side. So, on that front, is there some scope for improvement further from here?
We don't make future sounding statements, but we do realize that we had, in a surge for growth, we had lost certain basic, we had overlooked certain basic economic fundamentals, which led to reduction in profitability. But I'm confident that we would be getting our profitability up and about in the next 12 to 24 months, so that it reaches the norm of other tier 1 companies.
Okay. Mr. Nair, you have unveiled this strategy quite clearly in the face of the changing nature of technology as well. I mean, you have IoT and 5G in your strategy and in your bets. How much of your own business is already converted to the shifted paradigms?
Well, I think at the moment, I would say it's very difficult to say because there are always overlaps.
Yes, of course.
But I think the cutting-edge technology, if you only limit it to that area, would be about 20%, but it's going to grow. And the pace of change in technology is always much faster than in any other vector or any other economic enterprise.
Okay. Okay. While you were speaking, sir, we are continuing to show shots of the important personalities involved in the 2G issue. Now leaving their homes, now entering court is Mr. A. Raja. A little earlier, we gave you shots of Karimori entering the court. We'll keep you posted. It's only at 10:30 that we have to start concentrating on the verdict itself. Mr. Nair, you made another slightly disturbing point for me, more as an observer of the economy. Will you all be hiring less this year? Say, 2018, I mean?
Well, I think you're going to see, again, you're seeing two phenomena at the same time. On one hand, you are seeing reduction of manpower from the normal work because of automation and multiple other things. On the other hand, pardon me, you are seeing a huge expansion of where technology is becoming not only relevant, but also critical.
Okay.
So what will come out in the wash is not known. But human beings, say, per $100 of work or per $1,000 of work will come down.
So I'll allow you to catch your breath, sir.
Dramatically.
I'll allow you to catch your breath. I can see that. Well, you just need a couple of minutes. I wanted to tell you that by then, my early morning optimism that the market was trending higher has been somewhat botched. And that high has also gotten sold into. But to be fair, it's still inflationary.
Yeah, not to,
we are squabbling about small numbers.
Exactly. And you know, the mid-cap index is still at high and 3:1 advanced decline. Not too bad. And I tell you something, the Bank Nifty, it's interesting that you've tested the low first of yesterday rather than the high first, because if it's a sideways day in that case, and with this as an advanced decline,
this is a telling number. Yeah.
I think case is there for the market to have a second half rally today. Maybe once this 2G ruling is out of the way, Lata. But the fact that you're first testing the low is always good for the market, because in that case, if the bounce is there from the low point of yesterday, in that case, there's a good chance that you make a move towards the high point as well.
Okay. Well, Mr. Nair, you were telling us that probably jobs under $1,000 a day and under $100 a day will give way to more expensive jobs. Was that the point you were making?
No, I was not making that point. I was saying that for a technological work, say, of $100, earlier, say, there was one person required. Now it is 1/3 of a person required. Okay. But the expanse of technology is going to become a part of everyone's life. And therefore, what will come out in the wash is not known. But I do believe that we will not see a dramatic fall in manpower, because while the human beings are being reduced, on the other hand, the work required is increasing dramatically. But I don't know what will come out in the wash. But
fair point. Are you able to price your products higher then? Is the pricing environment improved?
Well, in newer areas, yes, of course, it has to improve, because, and it will also depend if you are in the forefront.
Okay.
If you are the people who are doing it, you will always get the rent which accrues from a new innovation.
Okay. I just want to ask about your, LCC and Comviva. Those two have turned around. What's the strategy?
LCC will require a significant overhaul, and which we are in the process of doing. Comviva is doing fine.
Okay.
Okay. Mr. Nair, In terms of artificial intelligence, that's something that we have all heard about over the last 3 months or so. How big is an opportunity for you in that space?
Oh, it's huge. I mean, again, it's almost difficult to measure because where all it can be applied is still undiscovered. In the sense is we are just biting at the edge at this point of time.
Okay.
It's also frightening. Because ultimately it's going to replace all of us.
Yes, we have been told that over and over again. We are trying to assume that editorial will not be replaced, but yes, you are right, a lot can be. Well, Mr. Nair, on that note, thank you so much for joining us today and giving us a peep into the new strategy and the new world ahead for Indian IT. Thanks a lot for joining us and have a great 2018 if we don't get to speak to you before that.
Okay, thank you so much.
Right, that's the word from the big man from the IT space. Let me get you back to the here and the now ahead of the 2G verdict this morning. Shireen Barnes spoke to a whole host of legal and telecom experts on what this might mean. Here's a slice of what they told us yesterday.
The corporate sector has now realized that the manner of functioning in the past of trying to get something for itself by getting cozy with the government or the powers that be will not work anymore. To some extent, the promoters will suffer, the promoters' reputation will be tarnished, and they will have to carry that baggage with them for quite a few years. So obviously, this will definitely have an impact on the corporate sector.
I think it's very, very important to get closure because all manner of allegations were made. We had all kinds of headlines. And actually, the situation goes all the way back to 2008 when these particular licenses were granted. So it cast a shadow not only on the industry, but also to the whole process by which licenses were granted, by which spectrum auctions were to be held, by which spectrum was allocated.
There is a larger benefit or the larger good that has come out of exposing the scam. It has basically reinforced the institutional credibility of the CAG, which took on the government, and it I think exposed for the first time in this scale and form this nexus between crony capitalism and government. The fact that government and government institutions could be so easily captured by a few companies. So I think that is the real impact of the 2G scam.
This scam was in the making from 2008 itself. And the CBI did register a case against unknown people. And CBI was virtually doing nothing till the Center for Public Investigations, Mr. Bhushan, Prashant Bhushan, Paranjoy, they went to the Supreme Court. And then it became a Supreme Court monitored investigation.